Welcome back. You're still tuned into Midcap Radar. MTAR Technologies reported Q1 numbers, saw strong numbers on a YY basis. Revenues up 22%, EBITDA up 71%. Order inflows were, however, weak. Srinivas Reddy, who is the MD at MTAR Technologies, is joining us now. Mr. Reddy, good afternoon. Thank you so much for joining in. Q1 has been good in terms of your revenue and profit growth. What is the outlook for the entire year in terms of revenue growth and margins, and all the order inflows itself? Can you give us a sense of what will it look like in FY26? Which will be the segments which will contribute the most?
So basically, we are in line with our guidance. We're very comfortable with it. We are given a 25% revenue growth for the year, with 21% EBITDA plus minus 100 basis points. We are on target with that, and the momentum is good. The way we are going forward, and also the exports where we are involved in the technology sector. We're not too concerned at this point of time about the tariffs which hit us recently. We got comfortable feedback from all our customers in the United States, but we also have diversified exports to Europe and other countries as well. So we are on line with what we have mentioned earlier.
Okay. Mr. Reddy, the only blip we can see is the fact that Q1 order inflows hasn't been as robust as, we would have liked it to be. In fact, you've said that nuclear segment itself, you're expecting close to 1,000 crores of orders. So current order book, order inflow guidance, where do you expect to end FY26 at?
See, as I said earlier, we're almost there. In nuclear division, we are expecting close to about 1,000 crores of orders kicking in over the next 3 months to 6 months. Most of it should come in the next 3 months, and the rest over the next 6 months. So it's not part of a business plan for this financial year, but which have to be executed within 3 years period. So we're going to have a very exponential growth in the nuclear segment, and we are very excited about it. We are almost there in booking those orders. And then we also expected huge orders coming in from our clean energy customers, from Bloom, from aerospace division as well. All these orders will accumulate over the next 2-3 quarters, and we would have a very strong order book by end of the year.
Mr. Reddy, while you talk about clean energy, what about the nuclear energy segment? Kaiga 5 and 6, other refurbishment of reactors, that is something that you mentioned as well. So can you tell us more about the receivable days? The working capital days have increased to 267 versus 229 earlier. What was the reason for this increase? You had mentioned that some of the receivables from Israel that had gotten delayed. What's the update there?
Yeah, we received the receivables by first week of July. So it was just a delay because of some ongoing wars going on there, but we definitely received it by first week of July. So I don't think that's an issue at this point of time, and we have working on some long-term projects with the nuclear division, so which will get dispatched during the year. So our target for the end of the year is that we're looking at about 200 days of working capital by March of this year. That's what we're looking at.
Okay. Mr. Reddy, one particular question that is causing quite a bit of uncertainty, especially for players who are exporting, is the question of tariffs. Now, number one, what is the applicable tariff for you? What is the kind of tariff rate you are expecting, or what are you working with internally? And because of this uncertainty, have you seen ordering activity get impacted, especially from Bloom as well as Fluence?
I have absolutely not seen that. In fact, post the tariff announcement, Bloom has given a huge forecast for next fiscal year, which is a very positive sign. And also from various of our aerospace customers, because we are in a technology segment and we have been very cost effective in what we are doing with all these customers. I don't think we'll have any kind of effect in terms of the 25% tariff what the US government has announced.
Okay. So what is the Capex plan for FY26 in that case, Mr. Reddy? Will you be spending more on certain segments, be it clean energy in particular, because that's been a margin driver for you?
We are looking at more of the oil and gas sector. As I mentioned earlier, we signed a long-term agreement with Weatherford. We are setting up exclusive facility for them. We have almost done their prototypes as well. So we'll be spending close to about 100 crores of Capex this year for various areas, including certain areas in nuclear division where we have to execute close to 1,000 crores of orders in 3 years span itself. So if you're executing like 60 crores in the past per year, we're looking at almost 300 crores of revenues which we need to orders which we need to execute each year, or more than that. So that's the kind of plan we have. We are gearing up towards that, and that's something which we are really looking forward to after a number of years, especially in the nuclear division.
Okay, Mr. Reddy, this particular conversation, we'll keep it a little short. So many earnings are trickling in, but thank you so much for your time. Wish you all the best for the rest of FY26. Well, we'll now slip into a short break. The management of NIIT Learning Solutions joins us next to discuss the Q1 earnings and the way forward.